Hey, what's up, folks? Welcome back to the channel. This is, I believe, video number 8, which is an even-numbered video, which also calls for no glasses. And somehow, only on even-numbered videos, I can see without my glasses. And before we get started, please remember to like, comment, and subscribe, and share this content so I can continue bringing you more awesome content like this. Now today, you may have seen from the catchy intro, we're going to discuss scrubbing financial statements, which calls for special cleaner. I'm just kidding. That's not really how we do that. But I'm going to show you what this entails. So I pulled up an example company, IBM. And what this concept that we refer to as scrubbing a financial statement really means is that when you're looking for a stock to invest in, you want to be a diligent investor if you can be, and you want to look over the company as much in detail as you can. You want to be like a Warren Buffett, so to speak. Focus on long-term appreciating companies with solid fundamentals. And to do that, you want to have a basic understanding of the basic financial statements, the income statement and the balance sheet and the cash flow statement. And what happens sometimes with companies is that they'll have an event over a 5-year period. They'll have a kind of a random event on their balance sheet or their income statement or their cash flow statement that is non-cyclical. It only happens maybe once a year. So the process known as scrubbing, which doesn't involve this, but just involves a keyboard, an Excel sheet, and downloading some data, and clicking a mouse and typing. All it involves with those tools is getting rid of that non-cyclical event, taking it out of the statement that you would have downloaded into Excel, so that when you're averaging total revenue, total expenses, and major items like that, you're not skewing the numbers based on one non-cyclical event. And that's what's referred to as scrubbing the statement. So let me show you here, because I picked IBM, which is a good example. So this is IBM's cash flow statement. And you'll see this goes back 4 years, and it has a projection for year to date this year. And you see most events on here, there's an entry for every 4 years except for one right here, issuance of capital stock. So that's one event that happened in 2017 that didn't happen in the ensuing 3 years. So that's one you would scrub off the statement when you do your own analysis. And you're trying to come up with an average number so you can possibly project future numbers when you're projecting. If you want to invest in this company long term, you would project based on the rolling 4-year average what the operating cash flow is, what the investing and financing cash flow is, and so on and so forth with the balance sheet and the income statement. So that's one that you can see that was a non-cyclical event on that statement. And sometimes if you really get into this like me and you really want to be a finance guru, you may ask why something like that would happen. Why would they issue capital stock at the end of this year? And just off the top of my head, I'm thinking it may have something to do with the tax cuts that corporations got the next year, which went into effect the next year. That could be why they may have done that. There was a lot of corporate buybacks of stocks that went on during this period, so that could be a potential reason for that. So, and then if we go over to the balance sheet, and this is obviously the really fun part of investing, crunching income statement and balance sheet numbers. I know everybody lives for this part of it, right? Not, but I'm trying to make it fun. So you can see in the balance sheet, IBM had another non-cyclical event in 2019. They had some capital lease obligations here that only happened that year. So this is something that when you're averaging out these totals, you would take that off. And this can apply also towards your own budgeting. Like if you remember from my last video about budgeting, you can take different events in your own personal finances that are non-cyclical. Like say you go buy a new car. That's not something you do every year, so you would take like the payments for that car and include them over a 5-year period. But you wouldn't come and say, hey, I don't have any money because I bought this new car, or I went and bought this, new set of furniture, or I got this kitchen remodel, and therefore I don't have any money to invest. Well, you can't quite say that because that's a non-cyclical event. So that's where a principle like this would come into play. And then, since we're having so much fun here, we don't want to do this, but we want to go here to the income statement and look over this. And you can see there's a couple of events here that were dilution of earnings that happened 3 out of the 4 years. So we'll leave that alone because that's more common than not. But it's generally a good idea to look over all these numbers to have some kind of a basic understanding of them, just to know what you're looking at. And this is actually Yahoo Finance, and I look at this anytime I invest in a stock or a company. I do my own research and make sure that the fundamentals are solid. And over here to the right, which is really cool, you can see the earnings. You can see whether the company missed or beat earnings. So you can see for IBM, the last 4 quarters, they've either met or beat earnings. And the next earnings are projected to come out October 20th, so this could possibly be a good one. And then just to go up here and show you, just so you know that I am, in fact, talking about IBM, that's IBM at the top, and that is the current price that it's trading at. So that's the gist of that. That's all I wanted to cover today. And if you would please remember, again, to like, comment, and subscribe. And that would help me out a lot. Now, the next few videos I'm planning are all going to center around investing, different aspects of investing. We're going to continue with first talking a bit about this month that we're just coming out of, September, which was a rough one for the markets. We'll talk about that, why you shouldn't give up. We'll talk about the Evergrande or Evergrande crisis and why that may not be over. We'll get into a little bit into the debt ceiling negotiations and things like that that are having a bit of an impact on the market. But for now, that's it for today. So please keep an eye out for my future videos. Like, comment, and subscribe, and invite all your friends and family to subscribe to my channel to get this awesome, life-enhancing financial education. Thank you, and have a great rest of your day.